Welcome back, everyone.
Right back at you.
Today, we're taking a deep dive into Citigroup's Q3 2024 earnings call.
Yeah, we've got the transcript right here.
Ready to dig into it?
Absolutely. And, it's more than just the numbers themselves.
It is.
It's about trying to understand their perspective on where they think things are going.
Yeah, what's their game plan? How does one of the world's biggest banks see the global economy playing out?
Exactly.
So where do they stand on the global situation right now?
Well, it seems like they kick things off with a bit of a cautious optimism.
Okay.
They call the global economy surprisingly resilient, even though growth has slowed a bit compared to last year.
Yeah, that seems to be the headline everywhere you look these days.
Right.
So what are they seeing that maybe we're not? What's informing that perspective?
Well, they break it down geographically.
Okay.
They point to some struggles in Europe,
Right.
and they're a little concerned, it seems, about China,
Makes sense.
particularly their consumer and property markets.
Mm-hmm.
But then on the flip side, they see India, Southeast Asia, even parts of Latin America as bright spots.
So it's a real mixed bag globally.
Yeah, a real mixed bag.
But here's something interesting I noticed.
What's that?
Despite all this uncertainty,
Yeah.
Citi seems very confident in its own strategy.
Hmm.
They even go so far as to call the past year a pivotal year
Okay.
and point to their results as proof.
Interesting. So they're really doubling down on the moves they've been making.
They are. So let's see what this pivotal year looks like.
Yeah, let's look at their results.
What kind of report card, self-assessment did Citi give itself?
Well, big picture.
Yeah.
Pretty positive, I'd say.
Okay.
They reported a 3% increase in revenue
All right.
compared to last year.
Okay.
And that's excluding earnings from businesses that they've sold off.
Right. So just focusing on their core operation.
Exactly.
Okay.
And get this, every single one of their business units
Yeah.
saw growth
Wow.
this past quarter
Across the board.
across the board.
Okay, that's impressive.
And on top of that,
Yeah.
they actually managed to shrink their overall expenses
Really?
by 2%.
In this environment,
I know, right?
that's unheard of.
Especially because at the same time, they're investing a ton of money in technology upgrades and, all that regulatory stuff.
Right, which is not cheap.
Not cheap at all.
So they're sending a message, it sounds like.
What's that?
We can handle these big changes that are happening and still deliver.
Right. And I think they want to show that these investments are going to pay off down the line.
Yeah, they're playing the long game.
Absolutely.
Now, they did call out one division in particular as a star performer.
Oh, yeah. What was that?
Their services division had a record quarter.
Really? What kind of numbers are we talking about?
Services saw an 8% jump in revenue.
Wow, 8%.
And here's why they're so excited about it.
Okay.
It was driven primarily by fees.
Fees. So that's interesting because that's a key part of their plan, right?
Exactly.
To rely more on that steady fee-based income
Yes.
instead of riding the roller coaster of interest rates.
Yeah, exactly. It's about stability and predictability.
Exactly.
But it wasn't all sunshine and roses, right?
Right. Nothing ever is.
They did admit to some hiccups.
Okay, like what?
Well, they said that their credit card losses were a bit higher than they had anticipated.
And that's always something to watch carefully,
It is.
especially in this kind of environment.
So how did they address that?
Well, they were very quick to point out that they have plenty of reserves set aside
Okay.
to cover these potential losses.
So they're projecting that everything's under control attitude,
Yeah, exactly.
but it is definitely something to keep an eye on as we move forward.
Absolutely. We'll want to see how that develops.
Now, this is where the earnings call, I think, takes a really interesting turn.
Oh, yeah. What happened?
They announced this $25 billion
$25 billion for...
private credit partnership with Apollo Global Management.
Whoa. Okay, so that's a big deal.
It is.
And just so everyone's on the same page.
Yeah.
Private credit, that basically means loans that are made directly to companies by private lenders like these investment firms.
Got it. So not your traditional bank loans.
Exactly.
Right.
And this partnership is huge.
It is.
It means they're basically teaming up with Apollo to offer these big loans
Okay.
directly to companies.
So they're getting into the private credit game.
Yeah, but they're not taking on all the risks themselves.
Right. They're doing it with a partner.
Exactly. It's a smart way to diversify what they're doing and potentially make even more money.
It's all about strategy.
Isn't it always?
And speaking of strategic moves, what's the latest on their plan to spin off Banamex?
Yes, the Banamex saga continues.
It does.
It seems like they're still aiming for that IPO by late 2025,
Okay.
but they're being very cautious about the timing.
Which makes sense.
Right, they want to get the best price possible.
Of course.
Maximize that shareholder value.
Right. But you have to wonder if they're also a little concerned about what's happening in the markets right now.
Oh, absolutely. Market volatility is a huge factor when you're talking about an IPO of this size.
Right. You can't afford to misjudge that.
Exactly.
And speaking of concerns, we can't talk about Citi without addressing the elephant in the room.
Oh, boy.
Regulatory scrutiny.
Yeah, it's been a recurring theme, hasn't it?
It has, and it's not going away anytime soon.
Unfortunately not.
In fact, they were recently hit with an amended consent order.
Ugh, that's never a good sign.
No, it's not. And for those who might not know,
Yep.
a consent order is basically a legal agreement between a bank and regulators,
Right.
where the bank agrees to take certain steps
Okay.
to address some kind of issue that's been identified.
So in this case, what kind of issues are we talking about?
It's likely something related to risk management compliance, maybe even how they're handling data.
Those are pretty serious.
They are, and it's got people talking
About what?
about the possibility of Citi facing asset caps.
Asset caps, that's a big deal.
It is, and for those who might not know, an
Yeah.
asset cap basically limits the size of a bank's balance sheet.
Okay.
So it restricts their lending capacity,
Yeah.
and that can have a big impact on their profitability.
It's a pretty strong signal from regulators if they go that route.
It is. So how did Citi address this during their earnings call?
Well, they were very clear about one thing.
Okay.
They flatly denied that there's any asset cap in place
Okay.
or even expected.
So they're trying to shut that speculation down?
Yeah, but here's the thing. They kept bringing up these data issues,
Interesting.
specifically around their regulatory reporting.
So it sounds like they're trying to get ahead of that.
Right. They're putting a lot of emphasis on getting their data house in order.
Which tells you something, right?
It does.
I mean, if they're having to address this publicly.
It means the regulators are watching.
Exactly.
And it's more than just throwing money at the problem.
Right. It sounds like they're trying to demonstrate a fundamental shift in how they manage and report their data.
Yeah, and that's not easy.
No, especially for an organization as large and complex as Citi. And let's be honest, a data-driven bank grappling with data management issues, that's not a good look.
Not at all. It undermines trust.
Exactly. And trust is everything in this business.
Absolutely.
So we've got this interesting situation where Citi is projecting confidence
Right.
about their strategy, their financial performance,
Yeah.
but they're also acknowledging that they need to improve when it comes to regulatory compliance.
It's a tough balancing act.
It is.
Trying to reassure investors while also showing regulators that they're serious about addressing these issues.
And let's not forget about those credit card losses.
Right. That adds another layer of complexity to the mix.
It does. Investors are going to be watching that very closely.
Absolutely. Especially since Citi's own positive outlook hinges on the consumer staying strong.
Particularly in the U.S. market.
Right.
So if we take a step back, look at the bigger picture here.
Okay.
What's the key takeaway from this earnings call?
I'd say it's that Citi is at a crossroads.
Okay, I like that.
They've made progress, but there are still challenges ahead.
So they're walking a tightrope.
They are. And their success depends on how well they can navigate this complex global economy.
Right, and deliver on all these strategic shifts they're making.
And crucially, convinces regulators that they have a handle on their risk.
That they've got everything under control.
Exactly. It's not enough to just talk the talk.
They've got to walk the walk.
Exactly. And given their track record with regulatory compliance,
Yeah,
they've got a lot to prove.
they do.
You used an interesting phrase earlier.
Did I?
You said Citi is at a crossroads.
Right.
I think that really sums it up.
It does. They've got a lot on their plate.
They do. But they've also made some real strides.
Right, in some areas at least.
Yeah, they've got revenue growth, expense control. They're making big strategic changes.
They're checking a lot of boxes.
They are, but then you've got those regulatory issues still hanging over their heads.
Right, and the uncertainty around their consumer business with those credit card losses.
And let's not forget about Banamex.
Right, that whole divestiture process is still ongoing.
It's a lot to juggle, even for Citi.
It is. So as we wrap up here, what are the key things to watch for in the coming months?
Well, I think there are three big ones.
Okay, I'm all ears.
First, can they actually pull off this transformation they're talking about?
You mean their plan to become less reliant on interest rates and more fee-driven?
Exactly. Can they really change their core business model?
That's a massive undertaking.
It requires streamlining operations, investing in the right technology, maybe even changing the whole company culture.
And we've already seen that they've had some hiccups with data management.
Right. Those regulatory issues are a big deal.
They are. If they can't prove to regulators that they have a handle on their data,
It could really hurt them.
absolutely, it undermines investor confidence, too.
Nobody wants to put their money into a bank that can't even manage its own data.
Exactly. So, yeah, strategic execution. That's definitely number one.
It is. What's number two?
Number two, how is their consumer banking business going to hold up?
Especially here in the U.S.
Right, because those credit card losses, those are concerning.
They are. And their whole optimistic outlook depends on the consumer staying strong.
But there are some worrying signs out there.
Like what?
Consumer spending is down. Inflation is still stubbornly high.
Not exactly ideal conditions.
Bad at all.
So if those trends continue,
Citi could be in trouble.
they could. And that's going to come down to how well they manage credit risk.
It all comes back to risk.
It always does.
So we've got strategic execution, we've got the health of their consumer business. What's number three?
Number three is a little less tangible, but I think it's just as important.
Oh, I'm intrigued.
Leadership and culture.
Interesting, we haven't really touched upon that yet.
No, but I think it's crucial in this case.
Why is that?
Because Citi's CEO, she's been very vocal about wanting to change the bank's culture.
Make it more innovative, more agile,
Exactly, and more risk-aware.
which is a lot easier said than done.
Oh, absolutely. Changing a company's culture, that's a huge undertaking.
Especially a company as large and as old as Citi.
Right, you're talking about changing how people think, how they approach their work.
It's about changing mindsets, not just processes.
Exactly, and that takes time.
And consistent effort.
Absolutely. It's not something you can just check off a list.
Right, it has to be ingrained in everything they do.
Exactly. So it'll be interesting to see if they can actually pull it off.
It will, because a bank's culture, that really drives everything else.
It influences their decisions, their risk appetite, their long-term strategy.
So yeah, paying attention to those cultural cues, that's just as important as looking at the numbers.
Absolutely, because the numbers only tell part of the story.
They do, they're snapshot in time.
Exactly.
But the culture of an organization that runs much deeper.
It's the foundation.
So as we leave our listeners with all of this to ponder,
Yeah.
what's the one big question they should be asking themselves?
Can Citi really transform itself?
Into this more modern, more agile, more resilient institution.
Exactly. Can they navigate all these challenges?
The global economy, the regulatory scrutiny, their own internal issues.
And come out stronger on the other side.
That's the billion-dollar question, isn't it?
It is, and only time will tell.
It will, but by diving deep into the data,
Right.
looking at the trends,
Paying attention to those cultural cues,
our listeners can draw their own conclusions.
and that's what it's all about, isn't it?
It is. It's about giving people the information they need to make sense of the world.
Exactly, because knowledge is power.
Couldn't have said it better myself.
Sure.
Well said. Well, that's just about wraps it up for this deep dive into Citigroup's earnings.
It was a good one.
It was. Until next time, everyone keep learning, keep exploring, and keep asking those tough questions.
We'll see you out there.